You're watching Silver News Daily. Subscribe for more.
What if I told you that the dollar's short-term stability is nothing more than an illusion? And what if this illusion could set the stage for one of the biggest silver price surges in history? Andy Schectman, a leading voice in the precious metals market, breaks it all down. Stay tuned, because what he's about to reveal could change how you think about your investments forever.
Of a reason, I think, or a accentuation of all of the reasons that brought these countries together. It's only more of the same. And you can't force other countries to take your currency, especially when it has been mismanaged the way that ours has, creating $100,000 worth of debt per second, 24/7, using these types of sanctions and threats of tariffs to bully people into taking it, or countries into taking it. It's a mistake. In fact, I think it only strengthens the resolve of the countries standing behind it. Is it a bluff? I don't know. And then on the other hand, in 2016, he did an interview, Trump did, where he mentioned, look, it would be wonderful, he said, to go back to a gold standard, although he acknowledged that there would be substantial challenges. And of course, we talk about Judy Shelton. She's known for not only her advocacy of the gold standard, but also she's been very vocal recently about issuing treasury bonds with a lower coupon rate, but then yet redeemable in gold down the road, to give demand to a treasury market that is certainly losing popularity and demand. And of course, Scott Bessent, the treasury secretary, his new nominee, has come out and publicly said that gold is his biggest holding. He is also an advocate for injecting, I think you could say, sound money into the system. So on one hand, I think there's evidence that he's thought about tying, to some degree, our system to gold. Although we haven't heard much about it recently, there have, been rumblings of it really since 2016. On the other hand, I think it's overplaying his card. I think it's a mistake to go around threatening. This is not how you reestablish confidence. This is not how you rekindle relationships that have been bruised and battered over the last 4 years. I think it's the wrong move. And if I had to guess, more posturing than anything, Jesse.
For decades, the U.S. dollar has been the bedrock of global finance, a symbol of stability in a world of economic turmoil. But what if this apparent stability is nothing more than a mirage? Recently, the dollar has benefited from several short-term factors that give it the appearance of strength: higher interest rates, robust demand from foreign investors, and its status as the world's reserve currency. Yet beneath this surface lies a precarious reality that few are willing to confront. One of the key drivers of this illusion is the Federal Reserve's aggressive interest rate policies. By hiking rates to combat inflation, the Fed has made dollar-denominated assets more attractive to foreign investors. But here's the catch. These rate hikes are a double-edged sword. While they temporarily prop up the dollar, they simultaneously inflate the cost of servicing the U.S. massive national debt, creating an economic time bomb. Then there's the dollar's role as the global reserve currency. This position has long been a source of strength, allowing the U.S. to borrow cheaply and exert significant influence in international markets. However, cracks are beginning to show. Countries like China and Russia are actively working to reduce their reliance on the dollar, forging trade agreements in local currencies and accumulating alternative reserves, such as gold. Could this be the beginning of the end for the dollar's dominance? Let's not forget about inflation. While recent numbers might suggest some easing, the underlying pressures remain. With record-high deficits, ballooning debt, and ongoing geopolitical tensions, the Fed's ability to maintain this illusion of stability is under relentless strain. The question we need to ask is simple yet profound. How long can this illusion last? And when it falters, where will investors turn to protect their wealth? This brings us to the other side of the equation: silver. A metal historically tied to economic stability, It's time to shine maybe closer than we think.
Reported if they purchase gold that is under the 999 purity, they don't have to report that either. So they buy the doré and the concentrate from the miners and bring it home and refine it themselves. They're the largest producer, accumulator of gold in the world. Alistair MacLeod 2 years ago was saying he believed they had 38,000 metric tons, 5 times what we do, 18,000 by the people, 20 by the state. They've been telling their people for years to buy gold and incentivizing them to do so. So my guess is that, let's just pretend that the West has all the gold they say they do. There's just giant IOU stickers on top of the bars. I don't know. It's annoying to me that they would be anything less than transparent, and I think it signals to the world that again, more, it's just it lacks trust. And then you look at the Chinese, and it's the opposite. But in a world that is moving in this direction, the last thing you would ever want to do is tell people how much you have and how much you're accumulating, as it would the trade would be crowded out. Everyone would run to accumulate it. So I guess what I'm really getting at is that I truly believe China has way more than anyone in the world, far more than we do, and it would be in their best interest to keep that close to the vest. And by the same token, if you believe the guys at GATA, like I do, they would tell you that the majority of the gold that the West has claimed to have has been leased out, pledged out, sold to keep the prices down for years and years and years. And if not, then just why not appease the people who are saying, why won't you do an audit, and just open it up to be audited? It is the gold of the American public, so just audit it. And anything short of that doesn't inspire confidence, and I think that's a bad thing.
While the dollar may seem strong on the surface, the foundation it stands on is crumbling. The U.S. national debt has now surpassed $33 trillion, a staggering figure that grows larger every second. This mounting debt is more than just a number. It's a ticking time bomb. With interest rates at their current levels, the cost of servicing this debt is skyrocketing, squeezing federal budgets and forcing tough choices between funding public programs or simply paying the interest on the debt. And it doesn't stop there. Inflation, the silent thief of wealth, continues to erode the purchasing power of the dollar. While official reports may suggest inflation is easing, everyday Americans feel the pinch in their grocery bills, utility costs, and housing expenses. But here's the real kicker. The government's reliance on quantitative easing and money printing over the last decade has flooded the system with dollars, cheapening their value over time. Internationally, trust in the dollar is beginning to wane. Nations like China and Russia are leading a quiet rebellion against the greenback, reducing their reliance on U.S. currency in favor of alternatives like gold and even their own currencies. Central banks worldwide are stockpiling gold at levels not seen since the 1960s, signaling a shift away from the dollar's dominance. This distrust is further amplified by geopolitical tensions. Whether it's sanctions that push countries to find dollar alternatives or trade wars that shake investor confidence, these factors contribute to an environment where the dollar's hegemony is no longer guaranteed. And let's not forget the ripple effect of Federal Reserve policy decisions. Each interest rate hike strengthens the dollar in the short term, but adds unbearable pressure on the global economy, where many countries hold dollar-denominated debt. The higher the dollar climbs, the harder it becomes for these nations to pay back what they owe, potentially triggering a cascade of defaults that could undermine the very system the dollar depends on. So what does this all mean? The dollar's short-term stability is masking a long-term crisis, and when this facade cracks, investors will rush to safe haven assets. And that's where silver enters the picture, a metal perfectly poised to capitalize on the dollar's fall and provide a hedge against the chaos to come.
It hasn't been audited. The gold stock hasn't really been audited since the 50s. Ron Paul has floated bills over the years to audit Fort Knox, and they were turned down. Transparency is what creates trust and confidence. the lack of transparency creates suspicion. When we talk about China, look, my whole career, Jesse, people would say the numbers that they are telling us in terms of their gold holdings are crap. That they were stuck at around 1,200 metric tons for years and years, and they were never updated. They are the largest producer of gold in the world, i.e., that they just found this huge stash. But they're the largest producer in the world, and they've been producing between 300 and 500 metric tons a year for years. That's not reflective of the numbers that they tell us, 23, 24, 2,500 metric tons. Now that's not right, not even remotely. Not only that, they're the largest producer and importer in the world. They have been flying around in interviews I've done with Sean Kuhn of Dolly Varden. They've been flying around the world buying doré and concentrate in both silver and gold from miners directly, disintermediating the commercial banks, disintermediating the market. They buy the concentrate and the doré, which are crudely refined bars, before they go to the refineries to be further refined, and bringing them home to China to further refine it. They're taking delivery off of the world's exchanges left and right. And then they tell the world that they've stopped buying gold for a few months, and everyone reacts like it's the craziest thing in the world, yet they're lying about it because the import-export numbers tell a different story. Not to mention when they purchase gold through the or through the People's Liberation Army. So the PBOC, when it purchases it directly, it's supposed to report it to the IMF. But if it's purchased by the PLA or a proxy bank, a commercial bank, or a sovereign wealth fund on behalf of the PBOC, none of these things are.
Throughout history, silver has proven itself as a cornerstone of economic stability during times of upheaval. Its dual role as both an industrial metal and a store of value has given it unique resilience, particularly when traditional financial systems falter. Unlike fiat currencies, which can be printed endlessly, silver is a finite resource, making it a reliable hedge against inflation and currency devaluation. Let's look back at some key moments in history. During the 1970s, a period marked by high inflation and geopolitical tensions, silver prices surged dramatically, reaching record highs as investors sought refuge from a weakening dollar. Similarly, in the aftermath of the 2008 financial crisis, silver experienced a meteoric rise, peaking at nearly $1.50 per ounce in 2011. These historical trends underline one critical fact: when uncertainty reigns, silver shines. Silver's value isn't just tied to economic crises. Its versatility in industrial applications, from electronics to medicine, ensures a steady baseline demand. But what truly sets silver?
A world filled with, lack of privacy. People are becoming more and more and more accustomed to these digital forms of wealth. And ultimately, where does that lead to? It's almost like a stepping stone, if you will. It's just becoming more mainstream. Yet at the same time, you look at what every central bank on the planet has been accumulating, and it hasn't been cryptocurrencies. I'm sure there are some that have. It's been hard commodities like precious metals. So, you hope it doesn't end poorly. You hope it doesn't end badly. But indeed, yeah, you have a generation of people who have put their faith in these digital assets and largely have done well. But in the end, I don't know how this all plays out. For me, I don't discount Bitcoin. I think there is certainly, you can see that the powers that be are pushing us in that direction. And rather than fight it, I think, yeah, you could certainly make some money by being in these asset classes. But in the end, for me, you take some of that profit and you pull it off the table and you put it into gold, you put it into silver, because as much as the media, as much as the information, as much as the rhetoric is pointing in that direction, don't look so much upon what they say, but what they are doing. And the most well-informed and well-funded money on the planet, their choice has been gold. over Bitcoin, whereas the public's choice has been Bitcoin over gold. In the end, I guess we'll see who wins this one and who's right and who's wrong. And it doesn't have to be an either or, but for me, yeah, it's certainly something that is difficult to ignore. I see it, but in the end, I feel more comfortable with physical assets in my possession. I mean, look at Bill Gates as an example, buying up all the farmland. I think it's tangibles in your possession, and I'm not throwing dirt on Bitcoin. I happen to think it's, you know, it's turning into something that is becoming far more viable than I ever thought it would be. I own a little bit of it. I accumulate a little bit of it, but in the end, it does not replace gold, and I think the central banks are showing you that.
Silver isn't just a safe haven for investors. It's also a critical component of the technologies driving the future. In recent years, industrial demand for silver has skyrocketed, fueled by its essential role in cutting-edge industries like renewable energy, electronics, and medicine. This dual demand, both as an investment and an industrial material, creates a unique dynamic that sets silver apart from other precious metals. One of the biggest drivers of this surge is the global shift toward green energy. Silver is a key ingredient in solar panels, playing an indispensable role in photovoltaic cells that convert sunlight into electricity. As nations race to meet ambitious climate goals, demand for silver in the renewable energy sector is projected to rise exponentially. In fact, according to recent estimates, nearly 15% of annual silver production is already consumed by the solar industry, and this number is only expected to grow. Beyond renewable energy, silver's antimicrobial properties have made it invaluable in healthcare. From wound dressings to medical equipment, silver's unique ability to kill bacteria without harming human cells has cemented its place in the medical field. With advancements in biotechnology and an aging global population, this trend shows no signs of slowing down. The tech sector is another major player in silver's rising demand. Its unmatched conductivity makes it a staple in electronics, from smartphones and laptops to electric vehicles and 5G infrastructure. As these technologies become more pervasive, the industrial appetite for silver will continue to climb, creating a robust baseline for its market value. But here's where it gets even more interesting. The supply of silver is not as elastic as you might think. Mining output has struggled to keep up with growing demand, especially as many high-grade deposits are becoming harder to access. This imbalance between supply and demand sets the stage for potentially explosive price movements, particularly if silver's industrial usage continues to outpace new discoveries. Now combine this with silver's appeal as a hedge against economic uncertainty. Unlike purely industrial metals like copper or aluminum, silver benefits from its dual identity. When the economy is strong, its industrial demand supports prices. When uncertainty looms, investors flock to it as a safe haven, creating a perfect storm for sustained price growth. The question is, how long before this imbalance pushes silver prices to unprecedented heights? With its unique position at the crossroads of industry and investment, silver seems poised for a future that's as bright as the solar panels it powers.
To a degree, yeah, it's certainly detracting from gold's appeal. I find it interesting that all you hear is crypto, um, and at the same time, you find that the central banks are accumulating hard assets. Not so much in the way of crypto. It's also interesting to note that if you look at the main trading pair on majority of the platforms like Kraken and Coinbase, it's USDT Tether with Bitcoin. And if you look at USDT and USDC, these dollar-based stable coins, the majority of their holdings are in US treasuries. And so it's interesting. It's as if, on one hand, people are trying to reject the legacy system, the old-time system, and go into crypto, and at the same time, in many respects, they're actually supporting and extending the life of the bond market as much of the world is shedding our treasuries. It's the backing of many of these stable coins USDC and USDT in particular, that is actually extending the life of the crypto market. Yeah, I mean, instant gratification, Jesse, evidently is not fast enough for most people. And there's this get rich gambling mentality on things like Dogecoin. And they have made people wealthy. They have indeed. But I find it interesting that in the end, we see the central banks buying gold hand over fist. And yet the impetus here with the public is into cryptocurrency. When you look at, you mentioned Trump going to the Bitcoin show in Tennessee. He did. And what I find also interesting about that is directly after he spoke was Senator Loomis, Cynthia Loomis from Wyoming, whose proposal to fund that Bitcoin account was to revalue the gold held by the Federal Reserve on behalf of the Treasury to a level sufficient enough to use some of the proceeds to buy that Bitcoin. And so, here again, yeah, I think the Trump trade is very bullish for crypto. I think that it's becoming almost a segue into a digital world.
The stage is set, and all it will take is a single catalyst to send silver prices soaring. But what could trigger such a dramatic shift? Let's start with the Federal Reserve. The ongoing cycle of interest rate cuts has created an environment ripe for a weaker dollar. With nearly 90% of traders now expecting another rate cut soon, the greenback's current strength could unravel faster than many anticipate, leaving silver primed for a breakout. Geopolitical tensions are another wild card. The war in Ukraine, rising instability in the Middle East, and economic shifts in China are all pushing global markets into uncharted territory. Historically, such moments of uncertainty have driven a flight to safe haven assets, and silver, with its unique affordability and dual-use demand, stands out as a top choice. There's also the growing divergence in market dynamics. On one side, industrial demand for silver continues to climb due to its critical role in renewable energy and technology. On the other, investment demand is seeing a revival as inflationary pressures and fears of an economic downturn make silver an attractive hedge. These forces are creating a convergence of demand that could ignite a long-term bull market. But the most fascinating factor might be the gold to silver ratio. This metric, which measures the relative price of gold to silver, remains historically high, suggesting silver is significantly undervalued. Many investors see this as a glaring signal that silver's price is overdue for a correction to the upside. Let's not forget the impact of shrinking supply. Silver mining is facing challenges with declining ore grades and increased regulatory hurdles slowing down production. At the same time, central banks and large institutions are quietly adding silver to their reserves, further tightening the market. And then there's the human element, investor sentiment. Contrarian dynamics often drive markets, and silver's current pessimistic sentiment might be the spark for its next rally. As history has shown, when the crowd is least optimistic, the biggest gains are often just around the corner. So here's the tipping point. A weakening dollar, surging industrial demand, and mounting geopolitical instability are all converging. The question isn't if silver will break out, but when. The conditions are undeniable, and all it takes is one spark, a rate cut, a geopolitical shock, or a supply squeeze, for silver to skyrocket past resistance levels and into uncharted territory.
It was a very strange decision, for sure. But I guess what would happen would be immediate nationalization of their mines and of their own minerals. I think that would be a foregone conclusion. And it's funny because most people would tell you to buy North American mining projects because you have a much lesser chance of having any type of move like that where the government comes in and nationalizes, and which I think is a trend that you could see around the world, of course. But yeah, what does it do for Canada? It puts them massively behind the eight ball, but at least they have the ability to nationalize their own properties within their own borders and would probably in the end fare better than a lot of other countries because they have access to it. Not only that, they have much of the infrastructure already in place to pull the metal out of the ground. So you then look at the Royal Canadian Mint, they're one of the main refinery hubs in the world. So they would have the ability to do it. It might just put them behind the eight ball for a little bit.
This is where everything comes together: the dollar's precarious position, the Industrial Revolution demanding more silver, and a global economy teetering on the edge of uncertainty. Andy Schectman's analysis reveals the undeniable truth: the current economic landscape is perfectly aligned for silver to rise to unprecedented heights. Let's break it down. The dollar, long seen as the pillar of global stability, is facing immense pressure from debt, inflation, and declining international trust. Every Federal Reserve decision to cut rates or print more money chips away at its value. As the dollar weakens, investors naturally seek refuge in silver, with its affordability and proven history as a store of value, becomes an obvious choice. On the industrial front, silver's role in green energy, technology, and healthcare ensures a consistent and growing demand. This is no longer just a hedge against economic instability. It's a commodity that fuels the future. From the solar panels that power homes to the electronics in our pockets, silver is indispensable. And with supply constraints tightening the market, the fundamentals point to a supply-demand imbalance that could catapult prices even higher. But what truly sets silver apart is its dual identity. It's not just an industrial metal, it's also an investment haven. When economies are strong, its industrial demand holds up prices. When uncertainty looms, its appeal as a safe haven takes over. This balance makes silver uniquely positioned to thrive in virtually any market condition. So why hasn't the breakout already happened? Sometimes markets are slow to react, and investors fail to see the writing on the wall. But as Andy Schectman emphasizes, the catalysts are already in play: the weakening dollar, surging industrial demand, and rising geopolitical instability. It's not a matter of if, but when these forces converge to push silver prices to new all-time highs. For investors, the window of opportunity may be closing quickly. As the dollar's vulnerabilities become more evident in silver's value gains recognition, those who act now stand to benefit the most. But remember, this is not financial advice. Always do your research and consult professionals before making investment decisions. If you found these insights valuable, make sure to subscribe for more expert analysis on the trends shaping our financial future. The world is changing, and staying informed is the first step to staying ahead.
Everything, that's what I mean, this surveillance world where, it's everything is becoming on the ledger. That is disturbing to me. I do think that's one of the benefits that is not talked about enough. The old adage, you don't hold it, you don't own it. There's truth to that. And in a world that's becoming increasingly digital, I don't know, I think there's a lot to be said for having it in your own possession, being off the grid, owning things that only you know that you own physically. And I think that's kind of the misconception, if you will, about cryptocurrencies, is that everyone thinks that you have such great anonymity. The off ramps will not allow that. When you come off the platform and move into tangibles, move into real items, sell it to buy other things, that loss of privacy is completely and totally gone. Now, I know that isn't what your question was, but I do think that I think that this is a trend, if you will, that we will see increase as more and more and more things become tokenized, get on a ledger, become something that erodes all of your privacy, and you end up being in a world where there is no privacy, there is no anonymity. Everything is digitized, and everything is moving in this surveillance state type of world. And does it ultimately move to the issuance of a central bank digital currency? Certainly the Federal Reserve would like that. Is that what this is? Is it the slow acceptance of everything being digitized, everything being tokenized. It's kind of what it feels like to me. And, I guess I'll go into that era kicking and screaming, hanging on to things that are, I guess you could say still old school and off the ledger and in my own possession. But, look, if that's the only way you're going to own gold and silver, okay, fine, I get it. But to me, um, there is no substitute for owning it physically in your own possession that no one in the world knows that you own it.